Hi friends, my name is Vinod Kumar Agarwal and I'm going to tell you about our social media platform where you can subscribe, like, share and you'll get a lot of video updates. Our YouTube channel is AS Foundation Pune, our Instagram channel is AS Foundation, our WhatsApp number is 9766921860, our Facebook page is AS Foundation Pune. So please subscribe, like, share with your friends and get lot of free videos and updates. Please visit our website asfoundation.co.in where you will find all great faculties in our countries. They are selling our products on our portal and you can get a lot of free discounts, gifts and purchase from our website asfoundation.co.in. Thank you for watching this video. All the best. Good evening. Please come to IAS 19 Employee Benefits. A very interesting standard. This standard deals with all forms of employee benefit except share-based payment, where employee gets payment in the form of shares of the company. For that, there is another standard, IFRS 2, share-based payment. Other than that, all forms of employee benefits will be covered by this standard. This standard is important because companies spend huge amount of money on employee benefits. Employees are given wages, salary, bonus, then provident fund, gratuity, leave encashment, pension, medical care, insurance, and so many other benefits, non-monetary benefits. How to do accounting of all these different types of employee benefits? Some benefits are paid as and when he renders the service, like salary, wages. Some benefits are paid after retirement, that is called post-retirement benefit. Okay. Some benefits are paid after few years, long-term benefits, like for example, silver jubilee benefit, golden jubilee benefit. A person works for 20 years, he will get some benefit. If he works for 25 years, he will get some benefit. Then they get perquisite like car, housing, mobile, free Wi-Fi, okay, watchman, gardener, driver. How do you do accounting of all this? That is covered by this standard. Who are covered by this standard? Part-time employee, full-time employee, permanent employee, temporary employee, and even those employees who are appointed on casual basis. But who are not covered by this? The contractual, those who work on contract basis, they will not be covered. What about a article clerk? Will he be covered by this standard? Yes, you are also into a full-time employment only. Is it right? More than full-time. Okay, that is also welcome. Are directors and managerial personnel also covered? Yes. So those directors who are like whole-time director, managing director. So such managerial personnel are also covered by this standard. So what is the objective behind this standard? It deals with all types of employee benefit accounting, as we discussed, except the share-based payment. And there is an exhaustive disclosure requirement also, which is covered by the standard. The standard requires that entity should recognize the following. One is how much expense you will recognize when the employee renders the service. Seems simple, but sometimes it becomes difficult for certain types of plan like post retirement plans, where to calculate the expense of each year would also be a challenging task, and if required, the entity takes the help of an expert called the actuary. And then you have to also recognize the liability. It also recognize the liability. Of course, when you are paying the liability will get reduced. Some liabilities are recognized now but paid at a future date, like for example payment for gratuity. So every year you have to keep on accounting for the expense and the liability, and when he will retire in future, that time you'll have to pay. So the standard deals with accounting of employee benefits and disclosure requirement. What is covered in this standard? Standard is applicable for accounting treatment of all employee benefits, which may be formal, that is properly agreed between the entity and the employee, formal arrangement. Employment letter is issued to the employee, okay, which mentions what will be his basic salary, HRA, DA, PF, gratuity, leave, and other things. It also covers legislative requirement. Like for example, in India, there are few laws which makes you pay employees certain benefits. For example, come on, 3 examples. Payment of Bonus Act. So bonus is paid. Payment of Gratuity Act, under which gratuity has to be paid. Then Provident Fund, Employee State Insurance, ESI. So those are legislative requirement. It also includes, this standard also includes informal arrangement. For example, there is no legal or formal arrangement, but over a period of time, certain payments have been made to employee and then it becomes a constructive obligation. Like in India, Diwali bonus are given to employees, even though you may not fall under Payment of Bonus Act or there is no proper arrangement. Then the standard says the employee benefits will be categorized into 4 categories: short-term employee benefit, post-employment benefit, other long-term benefits, and termination benefit. Okay, we'll discuss their meaning in the subsequent paragraph. So this standard only deals with 4 types of employee benefit, and all employee benefit will fit into one of these 4 types only. Whatever doesn't fit anywhere will fit into other long-term benefit. Is it right? This standard covers payments made to employee in the form of cash or in the form of kind also. For example, goods or services like car, house is also covered. This standard also deals with the payment either made directly to employee or to their dependents. Like for example, pension, family pension may be given to dependents instead of employee also. So some companies like Google says, even if the employee dies for next 10 years, we are going to give pension to the family of the employee. Possible? Yes. The standard does not deal with employee benefits covered under IFRS 2 or reporting requirement by retirement benefit plan, which are covered under IAS 26. So now our story starts. First is, what do you mean by employee benefits? Paragraph 4. What do you mean by employee benefits? Employee benefits are all forms of consideration. All forms of consideration means cash or in kind, given by an entity in exchange for service. Given by an entity in exchange for service rendered by the employees or for the termination of employment. What is or for the termination of employment? On the screen you see there are 3 types of benefits: short-term benefit, post-employment benefit, other long-term benefit. These benefits are provided because the employee has rendered the service to the organization. But this benefit is provided because he leaves the organization before the normal retirement period. So it is a benefit provided for termination of service rather than for rendering of service. So this standard deals with this also. Okay. Now, dear student, come to the accounting. So when you are doing the accounting, you have to first check what is the category of employee benefit scheme? You have to fit into one of these four only. Either it will be short-term employee benefit, post-employment benefit, other long-term benefit, or termination benefit. Now, how do I know whether it is a short-term employee benefit plan? So check whether it falls due wholly within 12 months. Falls due wholly, fully within 12 months after the end of the period in which the related services are rendered by the employee. So short-term employee benefits means either it will fall due in the current year, of course, like your salary that you get from your office, hard-earned money every month, that is short-term. Or plus it can also include those benefits which will wholly due within 12 months from the end of the year, reporting date. Like for example, bonus. Which bonus? Payable within 12 months. Leave encashment. Which leave encashment? Payable within 12 months from the end of the month in which end of the period in which the entity or the employee renders the related service. So there are short-term employee benefit. What is post-employment benefit? These are the benefits which fall due only after completion of the employment. But it is paid for services rendered during the course of employment. So we have to account for the expenses throughout this period when he renders the services, which entitles him to receive the benefit. Only the payment is made on or after the retirement. On or after the retirement. On retirement date, gratuity. After retirement, pension. Is it right? And then other long-term employee benefit. This is neither one nor two. It is neither one nor two. It is not short-term employee benefit because it does not fall due wholly within 12 months after the end of the period in which the related service is rendered by the employee. But it is not post-employment benefit plan also because it does not fall due after the completion of the employment. So you can say these fall due more than 12 months from the retirement date but before the retirement date. Like for example, long-term service benefit, Jubilee Award. What is Jubilee Award? After completion of a certain number of years, some companies pay a lump sum amount to the employee. Okay. So that can be an example. Then some companies give paid education leave. That means they will say after 20 years you can go do 1 year MBA program in Harvard University. We will pay the fees also and we will give you the salary also for that period. Right? That is also other long-term employee benefit. Or sometime you are just allowed 1 year of sabbatical. Enjoy life. But still you will get the payment. And what is termination benefit? This is the benefit paid as a result of either employer's decision to terminate the employee before the normal retirement date or employee's voluntary decision to opt for termination before normal retirement date. So what is the difference between 2 and 4? 2 is benefits on normal retirement for rendering of services. 3 is the benefits paid because your services are being terminated before the maturity period and therefore it is called termination benefit. Paragraph 6, recognition principle. The recognition principle will be based on two important principles. One, we will throughout this chapter follow accrual basis of accounting. In this chapter, accrual basis is more important because suppose we have to account for post-retirement benefit plan. You have become chartered accountant at the age of 21. You will retire at the age of 62. Okay. So, and assuming that you will work in the same organization till you retire, 41 year, after 41 year you will get gratuity. After 41 year you will get gratuity, but the company will start accruing the liability, okay, from the beginning only. So accrual basis of accounting. And in this chapter there is a use of present value of liability. The reason for using present value for recognizing a liability is the impact of time value of money is very significant here. In fact, now in all IFRS they allow you to do discounting if it is significant. Here it is more significant. Example, you will receive 40 lakh rupees after 40 years. But if you count its present value, it may be just few lakh rupees, 2 or 3 lakh rupees. So therefore, you have to first recognize the present value of liability and then you have to unwind the discount. Unwind the discount means you have to increase the value of liability as you reach closer and closer to maturity. Means you have to calculate interest on the opening liability, add to that liability. Next year again add the interest on that opening balance of liability. So that way on maturity it will become equal to your amount payable. So two principles will follow in this chapter. Accrual basis, wherever the benefits are due more than 12 months from the reporting date. Wherever the benefits are due more than 12 months from reporting date, apply discounting. If the benefits are due within 12 months from reporting date, discounting is not required. Let us read the four definitions quickly and then we'll do the accounting. What are short-term employee benefit plan? These are employee benefit plan which are expected to be settled wholly before 12 months after the end of the period in which the employee rendered the related service, but it does not include termination benefit. Termination benefits will be treated separately, hence not covered. Example of short-term employee benefit plan I have written in your notes: salary, wages, annual bonus, compensated annual leave, annual profit shares. 5 or 6 examples I have written. Stipend, right? And what are post-employment benefit plan? These are the employee benefit plans which are payable after the completion of employment. It will not include termination benefit and it will not include short-term employee benefit. In example of post-employment benefit: provident fund, gratuity, pension, medical benefits, post-retirement medical benefit, post-retirement insurance benefit, post-retirement housing benefit will be covered. Point 3, what are other long-term employee benefits? These are the employee benefits other than short-term employee benefit, other than post-employment benefit, and other than termination benefit. Means this is residual category. From understanding point of view, this will fall due more than 12 months from reporting date, but before the retirement period. So it is during the course of the employment, but after 12 months. And then next is, what is termination benefit? Termination benefits are employee benefits provided in exchange for termination of an employee's employment. Wow. Benefits provided for termination of employment, not benefit provided for rendering of services. And why the termination benefits take place? As a result of either an entity's decision. Entity says, Tata, bye bye, take this pink slip. Okay. Pink slip means? You don't know. Pink slip means your services are terminated. Okay. You are fired. I don't want to use that term, but it means your services are terminated. And this is also called golden handshake. Okay, golden handshake. That means shake your hand, take a lot of money, buy gold, and now done. Of course, you will get other benefits which are promised to you. This is additional benefit for termination. Your retirement date is 60 year. After 45 only, the company says you leave and will pay you a lump sum. Don't render the service for the next 15 year. Whatever your other benefits are there, that will be applicable. This is for leaving the organization 15 year before, and they pay a lump sum amount. Or sometime the employee will take the voluntary retirement. So popularly called voluntary retirement scheme. But every time it is not voluntary. It can be voluntary or it can be involuntary also. Or it can be forced also. Is it right? Now dear student, come to accounting of short-term employee benefit. This is the simplest part of this chapter. First point, remember, this will not be discounted. This will be recognized on accrual basis. This will be recognized as expense and would be charged to P&L account. If the amount paid is more than the amount payable, the difference will be shown as prepaid expense. Subject to it is recoverable. An asset has to be recoverable. Recoverable, either the employee will render the services in future period or he will refund the amount. If he is neither going to render service nor is going to refund, charge that also to P&L account as a loss. However, every time you need not charge the short-term employee benefit expense to P&L account. Keep this in mind. Sometimes we can capitalize it also. For example, an employee is working on construction of a property, plant, equipment. Company is constructing a building and some employees have been assigned the task of that completion of building. So for the period they were working on this project, their salary will not be charged to P&L account, will be capitalized. Or under IAS 2 also, if the employee cost is production overhead, then it will be carried forward under the head inventory. Or under IAS 38, IAS 38 intangible asset, that also example write down. IAS 38 is also applicable. There you have learned the cost of labor will be added to cost of intangible asset. Actual valuation is not required. This is about short-term employee benefit. So what are the journal entries you pass here? Journal entries. 3 journal entries write down. First entry you write down short-term or employee benefit account debit to bank. Employee benefit account debit to bank. Second entry, employee benefit account debit to outstanding employee benefit. Employee benefit account debit to outstanding if there is a short payment. Third entry, prepaid employee benefit to employee benefit if there is a prepayment. And then what is the fourth entry? P&L account debit oblique asset account debit. P&L account debit oblique asset account debit to employee benefit account. Either you recognize it as expense or you capitalize it. Good news, actuarial valuation is not required. Actuarial valuation is not required. That is about short-term employee benefit. You do accounting in a very simple, normal way. Do not overstretch your imagination here, okay? The way they teach in basic accounting classes at 11th, 12th standard, okay? That is your short-term employee benefit plan. In short-term employee benefit plan, there is a special situation on which you might get question, is short-term compensated absences Have you heard short-term compensated absences? What is that? Some companies allow certain leave to their employees. Okay. Some companies allow certain leave to their employees and they are paid for this. Take leave, get payment. Why these leaves are provided? Sickness leave, maternity leave, paternity leave, अच्छा, holiday leave, short term disability leave, casual leave, okay, privileged leave, whatever name you call it. Yes, PL, SL, CL, that is what they call many times. What about the accounting treatment? So, accounting treatment depends on the type of arrangement, the type of agreement. So, we will divide them into two categories first: accumulating and non accumulating. Okay, accumulating and non accumulating. And then accumulating also will divide into two categories: vested, non vested. Once the meaning is clear, logic is clear, then you will be able to do the accounting. This is one of the most difficult part in practice. Many accountants from graduation or post graduation course are not able to do the accounting of this part. Now, what do you mean by accumulating compensated absences? It means if you are given some paid leave in this year, but you are not able to utilize it, you are allowed to carry it forward for next year. If not this year, next year. So you can take the leave in the next year. Since this is a short-term compensated absences, all our discussion will assume it can be carried forward only up to one accounting period, that is 12 months. Okay. So that is called accumulated. And non-accumulating means you take the leave in this year, otherwise it will lapse. That is called non-accumulating. Okay. So compensated absences which are carried forward to the next year and can be utilized in future year if the current year's entitlement is not utilized in full are called accumulated compensated absences. They may be vested or unvested. For accounting purpose, we have to see first whether it is vested or unvested. Now, what do you mean by vested? Vested, any idea? Either you can take leave or you can take cash. Is it right? Or you can encash it at a future date. So that is called vested. The accumulating compensated absences for which employees are granted a separate additional cash payment. Underline. So here, if you don't take the leave, you can encash the leave. So here you will have to make maximum provision because you have to pay him either in the form of leave. He will take the leave, you make the payment, or in the form of cash. So here we will make provision for entire unused leave. Here we will make provision for entire unused leave. 15 days leave given in a year, 5 days of leave taken, 10 days are not taken. So you will make provision for 10 days of leave. Okay, you will make provision for 10 days of leave. You will calculate what is his remuneration per day multiplied by 10 and that much proportionate provision you will have to make. The entity becomes liable when the employee provides the services that increases their entitlement to future paid leave. Therefore, at each reporting date, the entity should recognize an expense and provision in respect of unused, wasted, accumulating compensated expenses, absences with the related expected amount payable. Some interesting discussion we can have now. For example, this is an employee. He will work for 1 month, okay? And his salary is 60,000 rupees per month. And he is allowed For example, 5 days of leave in a month. 5 days of leave. So what is the monetary value of 5 days? 60,000 divided by 30 into 5, 10,000. Now assume this person is like you people. He did not take any day of leave. He did not take even a single leave. Even though he could have taken 5 days of leave, what will be the charge to P&L account in this month for this employee? You are going to pay him salary 60,000. So you will pass an entry, salary to bank 60,000, 60,000, no problem. And he can carry forward the leave to the next year. Okay, so it is a wasted accumulating compensated absence. So the standard says you have to make a provision because either he will utilize the leave in the next month, next year, or he can encash it. So one more entry I will write. Whatever name you want to write, salary, employee benefit, account debit 10,000. To you can say provision. To provision for employee benefit expense 10,000. Right. So I will add 10,000 more here. So my total charge is 70,000. This is for 30 days and this is for 5 days. So total charge to P&L account is 35 days. Now there is a problem. You should raise an objection. When there are 30 days in a month, how can you charge for 35 days? Is it not right? Are you not doing a serious error? There are 30 days in a month, but you are charging salary of 35 days. So what is the justification for that? We have received more services. When you are giving him 5 days of leave, it means mentally you were ready for 25 days of service. So you are paying him 60,000 not for 30 days. You are mentally ready that he will render me service for 25 days. Okay. But he rendered 30 days of service. 5 days of more service he has rendered. So you got benefit of his service, matching concept. Charge more. Charge more. Is it right? So you will charge more in this year. So that is the reason. Even though the total may be more than 30 days, the logic is that you received services which was worth more than what you had expected. Because mentally I knew that this fellow will work for 25 days, for which I am offering him 60,000. He rendered 5 days more service. So therefore we should charge more. Okay. So this is about accumulated compensated absences. Now come to non-wasted accumulated compensated absences. It is accumulating compensated absences means it can be carried forward. But then what is non-wasted? You cannot encash it. You have to take leave only. If you don't take leave, it will lapse. Right. So that is called non-wasted accumulated compensated absences. Now many times the accountant will ask wherever you do audit in your company that they will say we should not make provision for this because it is non-vested. Or sometimes they say we should make full provision for all unutilized leave. Both answers are wrong. You will not make full provision, you will not make no provision also. Is it right? So you have to apply the concept of probability here. that suppose an employee carry forwards 10 days of leave, how many leave he will take in the future period? How many days of leave he will take in the future period? You have to estimate that based on your past experience, okay, based on whatever data you have about employee, your experience, and make provision for that, right? So we will make provision for the unutilized leave, but at the same time we will take into account the possibility that certain leave may be unutilized, may lapse. So that is about non-vested. The accumulated compensated absence for which employees are not granted a separate additional cash payment in respect of unused leaves upon leaving the entity are termed as vested accumulated compensated absences, right? Non-vested. Non-vested accumulated compensated absences, however, this may be used in future period. The entity becomes liable when the employees provide the services that increase their entitlement to future paid leaves. Therefore, at each reporting date, the entity should recognize an expense and provision in respect of unused non-vested accumulated compensated absences which are expected to be used in future with the relating expected amount payable. Underline. And the last one is non-accumulated absences. You cannot carry forward, you cannot encash it. So here we are going to provide for the expenses only when the absence actually occurs. So here the provision will be based on only actual absence in the current period. Provision will not be made for unused leave. Those leaves which are unused will lapse. Last line, no provision is required at the reporting date for those leaves which have lapsed, as this does not increase employees' entitlement to future compensated absences, right? Now, the summary version of this big paragraph. See this flow chart. Can the compensated absences be carried forward to a future period? The answer is no. It is a non-accumulating. Recognized as an expense when the absence occurs. Okay. But suppose the answer is yes, it is accumulating. Then ask this question, whether the employees who leave, will they get cash payment for unused leave? The answer is yes. Means wasting. Make full provision for the entire unutilized leave. But if the answer is no, you will not get cash if you leave the organization. Non-wasting, make provision, but keep in mind that some employees will leave before they utilize their entitlement. So quick question answer session. Where the provision amount will be maximum? Vesting accumulated compensated absence. Where it will be least, lowest, non-accumulating compensated absences. So why don't you solve a question? Number 1. An enterprise has 100 employees who are each entitled to 5 working days of leave for each year. Okay. Unused leave may be carried forward for 1 calendar year. That is also okay. The leave is taken first out of the current year's entitlement and then out of any balance brought forward from previous year. What an idea. First they will adjust against current year entitlement. Suppose you have taken 7 days of leave in a year. It is assumed 5 will be utilized out of current year, 2 is out of previous year. Okay. So who will benefit in this style? Employer or employee? Employer will be benefited. At 31st December, the average unused entitlement is 2 days per employee. The entity expects, based on past experience, which is expected to continue, that 92 employees will take no more than 5 days of leave in 20x5, and that the remaining 8 employees will be taking on an average of 6.5 days of leave. Now, after giving this question to you, they can ask you what is the amount of provision required. So in this question, the salary is not mentioned. So we will have to answer in terms of number of days. So first you see there are 100 employees. 92 employees will take not more than 5 days of leave. So are they entitled to cash payment in this problem? No. That means with respect to these 92 employees, you will not be required to make payment. Okay, their carried forward leave would lapse. But 8 employees are smart. They will take 6.5 days leave. Now for this 6.5 days, how the adjustment will be done? First 5 days will be deducted out of current year entitlement, that is year 2005, and 1.5 days of leave will be adjusted against brought forward leave, which means company will have to pay for 1.5 days in the future for 8 employees. Company will have to pay for 8 employees into 1.5 days, that is mathematically 12 days of pay. So they'll make provision for 12 days of pay. Is the answer written there? Yes, the enterprise expects that it will pay an additional 12 days of pay as a result of unused entitlement that has accumulated on 31st December. That is 1.5 into 8. Therefore, the enterprise recognizes a liability equal to 12 days of pay. In some question, they will say the salary is 30,000 rupees per month, which means 1,000 rupees per day. And then you can quantify it by multiplying by 1,000 also. Okay. If the question does not give you the salary, then answer in days. Write one question in the notebook. You have to be made to work something, otherwise you will go in sleep mode. Take out a notebook, start on a new page, write down IAS 19 employee benefit, short-term compensated absences. Have you written short-term compensated absences? Now a small example we'll see how the accounting is done. Mr. X had been given leave options as follows. Huh? You want to write Miss X? Right. Had been given leave options as follows. 5 days leave per month. Wow. And then Saturday, Sunday separate. So when will he work? 5 leave per month. In the month of March 2019, Mr. X accumulated his leaves. Mr. X accumulated his leaves and he can avail them in the month of April 2019. And he can avail them in the month of April 2019. His monthly salary is rupees 30,000 per month. His monthly salary is rupees 30,000 per month. Okay. Next line, write down consider 30 days per month. Consider 30 days per month, so that you can assume that it is 1,000 rupees per day. Journalize in the following cases. Journalize in the following cases. Under that, write down Mr. X is entitled to cash. Mr. X is entitled to cash. So this is which type of compensated absence? Wasted accumulating compensated absence. Wasted accumulating compensated absence. So he is entitled to cash. Mr. X availed 2 leaves and cash for 3 days in April. Mr. X availed 2 leaves and cash for 3 days in April. Second situation, that he took cash for 5 leaves. He took cash for 5 leaves. And third, write down he took 5 leaves. He took 5 leaves. Okay. First question is, at the end of 31st March 2019, question 1, are you going to make provision? Yes. How much? So you have said it is a wasted accumulated compensated absences. So you have to calculate the number of unutilized leave, 5, multiplied by 1000. Value of 1 day of service is 1000. So you have to write an entry. March 31st, 2019. Employee benefits account debit to employee benefits payable account. To employee benefits payable account, 5000. To employee benefits payable account, 5000. Is it right? There are 2 ways you can do the accounting in the next period. One is you can pass entry on the basis of what they have mentioned here. Other is you can just reverse the entry in the next year. You have created a provision, reverse the provision. Pass the entry for whatever amount they have paid. Again pass one entry at the end of the year for the closing provision. So automatically the balance in employee benefit expense will be charged to P&L account for that period. Is it right? So that is what normally we do in practice. We reverse the provision made in the previous period, make the payment for that period, again create a closing provision, and the balance automatically gets transferred to P&L account, which is for that period only. Okay, that can be done. You are most welcome to do that. Or you can pass the entries like this. Write down situation 1. Situation 1, you will pass the entry. How many days of leave he has taken in the next period? 2. And how much payment will have to make for 3 days? So employee benefits payable account debit 5000. To that liability account we are directly settling. To bank account 3000. To bank account 3000. And to employee benefits account 2000. 3000 is for payment made, 2000 is for the leave taken. Is the entry right? Right. Then write down situation 2, where he will take the payment. Employee benefits payable account debit to bank 5000 being amount paid. And what will be the entry in the third case? Employee benefits payable account debit to employee benefit account. Write down situation 3. Yes, write fast. Situation 3, write down April 2019 employee benefits payable account debit to benefit account. Okay, right. Now we will see the logic once again. in this third scenario, and maybe you will be convinced in that case, let us call it first period, second period. In first period, 30 days is the number of months, 5 days of leave allowed. But he did not take any leave in this period, no leave. And what this fellow did, in the second period, 5 days leave allowed to him for this month, and he also took 5 days leave which was brought forward. Is it right? Now let us see the impact of this on our profit and loss. In this period, first period, how much amount will be charged to profit and loss account? We will charge 35,000 to P&L account. We will charge more because he has rendered services for more period. Now in this month, he has rendered services for 20 days only. He took 5 days of leave which is allowed for that month. He took 5 days of leave which is allowed for that month, and he took 5 days of leave which was brought forward. Is it right? Now my question is, if you do this accounting, how much amount will be charged to the profit and loss account of this period? You are going to pay him entire 30,000 rupees. Are you going to pay him 30,000 or 25,000? 30,000. 5 days of leave he has brought forward. For that you will pay. 5 days is allowed. So you are going to pay him 30,000. So one entry will come, employee benefit account debit to bank account 30,000. And then this second entry will come, employee benefit payable to employee benefit. So in the second year, the amount to be charged to P&L account will be 25,000. 30,000 payment made minus 5,000 adjusted for previous period. Now this period we are charging less. Why we are charging less? He has rendered less service. He has not even rendered service for 25 days. He has rendered services less. So therefore this period he should be charged less. This year P&L account should be charged less because company received less service. If you look at the total, it comes to 60,000. And total number of leave taken is also 10, which is allowed. But first month more service, more charge. Second month less service, hence less charge, right? So this is the logic of this standard. Now we'll come to next paragraph. One more question, write down. Just 2-line question, 1-line answer, right? In the above example, Mr. X is not entitled to cash. Mr. X is not entitled to cash. Mr. X is not entitled to cash. Probability of availing leave is 80%. Probability of availing leave is 80%. Past journal entry on 31st March. Past journal entry on 31st March. So this time what you do, calculate the provision amount. It will be now 1000 into 5 into 80%. So entry will be employee benefit expense account debit 4,000. Calculation, if you want to write 1000 into 5 into 80%, to employee benefits payable account 4,000. Okay. Then you just write a note below, reverse the entry in the next year. Reverse the entry in the next year. Okay. Then again write one next line. Pass entry for employee benefit expense paid in the next year. Pass entry for employee benefit expense paid next year. One more line. Make provision at the end of the year. In the next year. Make provision at the end of the year in the next year. One more line. Transfer balance in employee benefit expense to P&L account. Transfer balance in employee benefit expense to P&L account. This will take care of any change in estimate. This will take care of any change in estimate. This will take care of any change in estimate. That is, whether the employee takes more or less than 4 days of leave. That is, whether the employee takes more or less than 4 days of leave. Have you understood? I'll just explain these 4 lines again. What if the employee takes 3 days of leave, 2 days of leave, 5 days of leave? So automatically when you follow that entries, it will take care of either short leave taken or excess leave taken than what we had anticipated. Is it right? So your balancing figure will automatically take care of that. Now one more question in your book. I think question number 2. Entity has several employees, each of whom is entitled to 8 working days of paid sick leave for each year. Unused sick leave may not be carried forward to the next year. Underline. That is the hint to answer this question. Unused sick leave cannot be carried forward to next year. So what is the nature of this time leave? Non-accumulating compensated absence. Employees are not entitled to cash payment for unused entitlement of sick leave on leaving the entity. Management is preparing IFR, interim financial report, for the first quarter. Now it is not annual accounting, they are doing interim accounting. You are at the end of quarter 1. Whether 1 quarter of unused annual sick leave entitlement should be provided, because the sick leave may be used in the remaining 3 quarters. It is an non-accumulated compensated absences. Is it allowed for annual accounting? No. So it will not be allowed for interim period accounting also. Okay. So therefore there is no need to make provision for unused sick leave. Management should not recognize a provision for unused sick leave. Since the use of sick leave is determined by an unpredictable future event, that is the illness of the employee, and not through the employee's own wish. Of course, nowadays employee wish and they become sick also. Artificially ways of becoming sick. A low level of sickness in first quarter does not cause a higher level of sickness in the future quarter. That also you can write. Management should not recognize an expense in respect of non-accumulative sick leave. This much is enough actually. Non-accumulative sick leave, if you are not going to provide for it at end of the year, do not provide for it at the end of quarter also. Because employee services does not increase the amount of the benefit. Okay, try one more question. ASF Limited has a head count of 100 employees in 2010-11. As per the employee policy, the employees are entitled for 30 annual leaves. Oh, how many leave? 30 annual leave, out of which 10 may be carried forward to the next year. Just write next year. Current remove. Next year. 10 sick leave, out of which 2 may be carried forward as paid leave. Oh, how many total leaves he is allowed? 40. 10 can be carried forward here out of this 30, and out of 10 sick leave, 2 may be carried forward as a paid leave. At 31st March 2011, the average unused entitlement is 5 days per employee for privilege leave and 1 day sick leave unused. On an average, it is found that number of such employees who would be claiming annual leave would be 30 and 10 employees who would be 30 and 10 employees who would claim sick leave. Compute the liability to be recognized as sick pay and privilege leave by the entity in 2010-11. 30 employees will take which leave? Privilege leave, right? And how many days of privilege leave is carried forward? 5. 10 is allowed. 10 is allowed, 5 is unused. So provision will be made for unused entitlement. So 5 into 30. And 10 employees would claim sick leave. 10 into 1, because 1 is unused. So this way you have to make the provision. So the answer is written in one line only. The entity will recognize liability in the books equal to 150, that is 30 into 5 for annual leave, and 10, that is 10 into 1 for sick leave, right? All this small question will form part of a bigger question. Okay. Now one more question for you. A company has an informal understanding with its employees that unused leave may be taken as paid vacation in the following year. Now this is an informal understanding. You can carry forward the leave to the next year. Would a provision be required for unused leave? Why yes? It is informal. I can say no, I have never said that. I can say okay, whatever I have done in past, forget. Now henceforth no more leave. So the answer is no, you can't say like that. There is a constructive obligation. An informal understanding casts a constructive obligation. An employer cannot go back on its agreement without causing a significant damage to its relationship with the employees. So you have to make a provision. Now next is profit sharing and bonus plans. Can company pay to employees variable payment? That means can it be linked to sales profit so that he is little bit motivated to work harder? Will it be called as a expense or will it be called as a appropriation of profit? It will be called as an expense because this is paid in his capacity as employee, not as shareholder. So what the standard says, expected cost of profit sharing and bonus plan are recognized only when there is a present legal or constructive obligation as a result of past event and when it is possible to make a reliable estimate. So you can provide for this also. The obligation exists when the entity has no choice but to make the payment. Constructive obligation means that irrespective of the existence of a contract for payment of such terms, the obligation exists as a result of past practice of the entity. So profit sharing and bonus plan are also normally short-term plan. Like you have studied in some accounts chapters, MD will get 5% of net profit. Okay. So solve this question. Whimsical Employer Limited grants annual bonus to its employee on discretionary basis. What the standard says, there must be present legal or constructive obligation, but it is discretionary. Then WEL has a March 2016 year end and finalizes accounts by April 2016, but bonus is announced and paid in late May 2016. Now, one more problem is there. Your books of accounts are closed in March. It is finalized in April, but bonus is announced and paid in late May 2016. That means even if I take into account the event after the reporting date, this event is taking place after April when your accounts are finalized, which means we will assume it means board of directors have approved the financial statement. Question is a provision required for March 2016? No, only no. Give me two reasons. First of all, it is discretionary. So therefore, you can always change your idea of making the payment. It is not constructive. Constructive means every year you have been paying. So then we will create a constructive obligation. It is discretionary. And secondly, it is very difficult to estimate the reliable amount also over here. There is no formula agreed with the employee. Since in the given case there is no formula, nor is the amount finalized before the financial statements are approved, nor is there a reliable past practice, provision for bonus is not made in March 2016 accounts. Is it right? Next example, only in the question. ASF Limited pays 2% bonus on profit after tax to its employees. Only in question. Distributed in proportion to annual basic pay. Why you are laughing? Only 2%. Maybe some more zeros after that. Profit is determined only after the reporting period. Should the obligation to pay profit sharing bonus for the year 14-15 be recognized in 2015-16 when the amount of bonus is determined and paid? There is no formal agreement or such bonus payment. So should we make provision at the end of 2015 only, or should we make provision in 15-16 when the amount of bonus is paid and determined? This question is different from the previous one. First, there is a there is constructive obligation because it pays 2% bonus. So no discretion, and you have been doing it for last so many years. Second, you can calculate the bonus at the end of the year because you can finalize your profit figure. And the moment you finalize your profit figure, you can also calculate the bonus. Board of directors are not going to approve a P&L account which is not yet final. So therefore, on estimated basis, you can calculate the amount of provision. So the liability for short-term profit sharing bonus has arisen out of rendering service by the employee during 2014-15. Matching concept. Expense should be charged in that period where the services were obtained. So therefore, it should be recognized in 14-15 as per IAS 19. Now, it is an adjusting event. It will be provided. Last question for today. Whether employee participation in profit sharing and bonus plan will be treated as an appropriation or will be treated as charge to P&L account. Appropriation or charge? Appropriation or charge? Option A, option B. MCQ question. payment made to employee in a profit sharing plan is dash. Option A, appropriation. Option B, charge to penal account. Charge to penal account because it is a transaction with the employee, not with the owner. Appropriation is a transaction with the owner of the entity. Employee is not the owner. Profit is only a basis for payment of employee remuneration. So this is a variable pay package, but it is a remuneration only for rendering the services. Now we will continue tomorrow.